And the Independent Investor Channel collaboration. Hope everyone's doing well tonight. So this is pretty cool. I want to first kick it off by thanking Ryan for doing this.
My pleasure.
He talked about it a little bit in the live stream. I immediately responded to him with an email, and he was very cordial and was like, "Yeah, man, let's get it together. Let's get it done." Very timely in his response, and so like I said, this is a great opportunity for me. So I appreciate you, cooperating and making this happen. So thanks for doing that.
No problem, Jason. Thanks for having us, and thanks for aligning. I think we probably already put enough content online today in our back and forth, to make another live stream. So it's been cool to know you today for sure. And thanks for having us on and hosting this opportunity for collaboration and just bringing people together to talk about financial stewardship. It's good stuff, man. I'm glad to be here.
For sure. So I know there's going to be a lot of questions. I mean, we did make this. So most of my other collabs have been pre-recorded, and then I post them. We post them on one another's. But last night in Ryan's live stream, he was.
I got pressed. They were like, "Hey, it's going to be live." I was like, "That's the only way I roll, baby."
So he before then, because I had already said some things about how I thought we were going to do it, but we didn't discuss it. I'm flexible. Hold up, let me mute this. Okay, sorry. So he, we didn't discuss it, so it was being, hammered out. It was being fleshed out as we went. So, but I'm flexible and I'm totally cool with it. So I think this is a cooler way to do it. But we do have. I'm gonna just caveat that was by saying we have a little bit of a format that we're gonna try to stick to. We got some questions that we've come up with, and we're gonna, go back and forth and answer about each other, because a lot of my audience may or may not know Ryan. I think most of my audience probably knows Ryan, but a lot of his audience probably doesn't know me. So this will just be a way where we can get to know each other's channel and just each other a little bit more on a personal level. So we're not going to completely ignore the chat, but we're going to probably come back to that more at the end, or maybe after a couple questions get out of the way, we'll come back to the chat. What do you think about that, Ryan?
It's perfect. I mean, I want to incorporate as much as we can, but this is also about kind of getting to know our community as well, and bring us closer on what we bring to the table as well. So again, Jason, thank you so much. I've been doing YouTube now for about 3 years, and I've got 333 videos online. So it's great to be here. I've been investing for most of my life. As a matter of fact, I don't really remember a time when I didn't invest. The problem is, in reflection of my investing evolution, it's amazing to be where I'm at now, because I've spent a good portion of my investing career working through trials and tribulations. What works, what doesn't work. And in reflection, I've been with 4 major brokerages in my evolution, trying to do the right thing. I always knew that the mathematical validation for why you invest was there. Okay. It was just the method of my seeking out how I was going to leverage that opportunity in the stock market. And I got to tell you, Jason, a lot of my approaches over the years have been wrong. And it's, good on me for coming onto a social media platform and admitting my faults. I don't see that very often,
Yeah.
If you do this, and this, you're going to drive around a Ferrari. And I think, unfortunately, that information or that message gets in the hands of a lot of younger investors aspiring for, the truth. They're looking for, some right answers, something that actually works. And I think building wealth needs to be put in a different category than seeking, fast money or overnight success. This is why penny stock investing, this is why, every scam in the book is very attractive to young investors, because they think that, or they want to believe that they can walk those avenues and have instant success. And in my opinion, It's planned failure for a lot of folks, and a lot of people get caught up in it, man.
So you can't get rich quick?
Well, look, I wish everybody well. If you can do it, I haven't figured out a way to do it. I figure if I can get rich slowly, that's good enough for me. Because at the end of the day, the level of risk that I take on getting rich slowly doesn't compare at all to some of these programs that I wouldn't even put up to gambling. I think you've got better odds of gambling than you do at penny stock investing, and it's unfortunate because it's really attractive to a lot of folks, and a lot of people glamorize it and get on, and they don't know the first thing of what they're talking about, but you can sell it. It's easy stuff to sell to somebody who's willing to listen, and I think young folks deserve a lot better than that. I think folks, me and you, Jason, we were talking earlier about how much similarities we have. We're the same age. We've got the same family structure. We've been around the block a few times. We've done some real jobs. And I think that pedigree that we're cut from, I think it validates our opinion. And I think at the very least, folks should kind of perk up a little bit and listen to what we have to say. Because I don't think there is any substitute. I don't think you would regret where you come from and your hard work. That helps you apply what you do now. I sure don't regret where I come from.
Yeah, it makes me want to keep it too that much more, and not like blow it. Even though I've made dumb mistakes and along the way, blown money and stuff. So but
you appreciate it.
Yeah, appreciate it a lot more, and want to build it and have it work for the long term. All right, let's jump into this first question, which is kind of interesting one that could go a number of different ways.
I like those.
Yeah. So I guess real quick, I guess, so we don't lose track. K97 got a question about Altria and Philip Morris merge. That could go either way too. You never know about mergers.
No, not anymore.
Yeah, who knows? Especially with all the
antitrust. It's and I think K9 hit me up with this question as well. It's interesting that the two companies split, right, a few years back, and now they're going to come back together again. It's not one of those industries I'm touching right now, to give you my honest opinion. And we should premise that neither me or Jason are financial planners. These are opinions at best. For entertainment purposes only, certainly looking.
Hopefully entertaining. Hopefully entertaining.
What you're talking about. I've invested in Altria and I've invested in Philip Morris, and I've made good money with both stocks. They're both really well-run companies. The problem I have right now is the nerve of negativity surrounding the vaping product. And I know what's I know what the hype is, and I know what the attraction is for a lot of folks out there that may be struggling to get off of cigarettes. But I think there's a lot of research that's coming online. It's fairly new. So just like a lot of other industries, we don't really know what the health ramifications could potentially be. Not only that, but when I look over the investing landscape, there's so many more attractive areas of investing. And right now, I'm not touching either one of those two. That's just my opinion. Great dividend payers, no doubt about it. If you wanted to grab a little bit of exposure in that sector, you could do so. But that's just my opinion.
Yeah. I kind of am of the mind. I think at the end of the day, if there's any that will make it likely that'll, through all of the political risk and stuff like that, Altria will probably be the last one standing, if there is any standing. But like you said, there's a risk that there will be none standing. So unless they were to find another means for their business model, which they have other things that that they make revenue on, but it's just one of those things that it could go either way. So a lot of risk, a lot of speculation in it.
I would encourage people, to remove their morality when they're looking at a potentially good investment. Certainly, And I know I'm letting a little bit seep into this when answering that question. I mean, hell, I've got 10 shares of McDonald's, that's not necessarily the healthiest option out there, so I can't have it both ways. But for some reason, it just doesn't, I talked about the sixth sense a little bit. When it comes down to hitting that buy button on a particular stock, I look at a lot of different stocks, across a lot of different sectors. And just because I'm reviewing those stocks and want to make a good trade doesn't mean I invest in everything that I research. I really do go through a progression before I hit that sell or buy button.
Yeah, that's funny you say that. I watched a video yesterday of Peter Lynch. But it's a more recent video, probably within the last, 10 years or so. And it's on Fidelity's website, because he was one of the best Fidelity fund managers ever. And that's what he was talking about. Like one of the reasons Fidelity has seen so much success over the years is because they remove all of the reasons not to look into companies. And when they're looking at when the fund managers are building the portfolios at Fidelity, they won't say, we won't put Sin stocks, or we won't, invest in cannabis or whatever energy stocks, so they remove bias. And so, yeah, like you said, if you don't do that, then you're missing out on opportunities. But at the same time, if you don't do it, there's nothing wrong with you not doing it. So,
well, I think it's a good time as any too, Jason, to talk about, you're talking about two stocks there, and, a significant difference between coming onto YouTube and talking about the single stock avenue to investing, and the diversified ETF index fund, mutual fund option, and I don't put those two in the same arena. I don't. Now, most of the folks who tune into my channel, they know that I enjoy both. Okay. But I do think there's a level of progression that people need to take in their thought. If you're a beginning investor and you want to try to pin your coattail on a couple of stocks, 5, 10, even 20, you're not diversified. So why not just introduce yourself to the market, get yourself a little bit of conditioning, get yourself a little bit of fitness, getting used to watching your money go up, but also down. That's a lot of people, man. They get invested and they think just because they're invested, they're entitled to profit. It doesn't work that way. It doesn't. You got to put time in the game. You got, if you're not mentally fit enough to hold an investment as long as that investment requires, you're probably not going to succeed anyway. So get the mental aspect right. Give yourself a chance to succeed when you're looking to kind of edge yourself into the market a little bit, because it's humbling, no doubt.
Right, for sure. All right, cool. So we're going to ignore the chat for a little while, but we'll be back to you guys. Hang out. We appreciate everyone tuning in. Absolutely. But let's get this first question. So the one that I said that could go either way. So what are your perspectives on the YouTube opportunity, and where do you see your channel in 5 years or longer? This may not be a lot of people that are just investors that don't care about our YouTube channels. They might tune out right now, but I think that there's a lot of content creators that watch our, watch our videos, and we're involved in that community. So I think this is very pertinent to a lot of our viewership too. So
I think people need to listen to what we had to say. Here's the thing about the YouTube opportunity. We were just talking about this earlier on, Jason. I can't tell you how many times people have come to me and said, Ryan, can you help me with my finances? I'm down a little bit over here. I've got some questions over here. I've got a real soft spot over here. Lots of people need that assistance. All right. And the frustrating part for me is, I would always put my heart on my sleeve and look to help those folks. Maybe an hour devoted to sitting down, only to have that person leave the room and not deploy a thing that I talked about. Now, that's one person. The YouTube opportunity is different in that I can push out my message the way I want to push it out. Now, it's going to be perceived in 1,000 different ways, okay? But for the people that really hear and extract the extent of the message, that's the real value, especially if they can take that message, deploy it, where they wouldn't have deployed it before. They heard something that I said that maybe put a little motivation, maybe put a little bug in their ear, maybe put a little bit of knowledge in their ear so they can take that and maybe deploy it. Maybe they see something on a Friday live stream and come Monday, they freaking can't sleep over the weekend because they're so excited about the prospect of something that a motivator or a YouTube creator put out there, okay? Now, I'm not saying that all 1,000 people that come into a message, a lot of them, you're right, Jason, they're going to turn off the message. See you later. I don't have time for those folks. And that's the beautiful thing about the YouTube opportunity, is that people can selectively consume whatever content they want. You know what I mean?
Yeah.
That's the beauty of it. Where I see the channel in 5 years, I had it explained to me in a very simple manner. How about starting a business with unlimited upside potential with very little overhead to start that business? YouTube fits that bill for me. It does. I can control the level of my upload schedule. I can go on a vacation and let the YouTube opportunity be shelved. I can do that. Or I can be as aggressive as I want to be with the YouTube opportunity. And it's amazing to me how I go through some of those soft spots on the channel, and the content is still out there. It's still reaching people, okay? I still got a lot of duplicates on some of the most important questions in the investing landscape, and I'm totally okay with fielding those, but I do a pretty good job of throwing up that content with the idea of really covering the landscape of a lot of those basic questions that investors have for getting started in the stock market. So that's kind of the way I feel about it, Jason.
Well, and so then the second part of it, do you have long-term goals with your channel, 5-year goals?
Well, a lot of my goals are the way that they were when I first started. I want to reach people. We need to empower one investor at a time. Those fundamentals of the channel from day one are there. I could sit there and tell you, well, my goal is to get to 100,000 subscribers. People who tune in to me respect the fact that I don't put a whole lot of value in that at all. I don't. All right. If there's a few hundred folks that benefit and put real value in their portfolios for them and their families, that's what I'm striving for. Okay. So if we end up becoming successful in the eyes of YouTube, so be it. But it will not be at the expense of the message, and it won't be at the expense of the integrity of the few products that we roll out on the Independent Investor channel, the few affiliate links that we've got, which fit like a round peg on the channel, that of which really didn't exist when I first started. Jason, it was Robinhood was the hype. Okay, Robinhood at the time was the big hype, and I spoke a little bit about this on Friday in the live stream. It got a lot of people in trouble, really did, and to harmonize those free investing opportunities with retirement accounts, that's legit. It's legit.
Right.
So where I see the channel going, I'm already having a few folks get back to me and talk to me about, hey, I've met this threshold that you talk about. I never thought I could have $25,000 in a personal portfolio, and I freaking do. That to me is huge. So as we grow the channel, I'd like to see some of those portfolios grow. I haven't had anybody yet come back to me and say, hey, I'm at that $50,000 threshold. This was one of my very earlier videos, but that would be my goals for the channel, is to really acknowledge the recipient of the message and the successes that they are enjoying based on maybe in no small part or large part to my message. That's it. It's a lofty goal, man. It really is.
All right.
It's a fickle topic.
Yeah, so I guess I'll piggyback on it, and my perspectives are I joined it sort of just to chronicle as I looked over the landscape of YouTube and didn't see. I mean, there's a handful that I thought were interesting people chronicling their as their portfolio progression. And I said, you know what? I think that'll help motivate me to continue and to, just regular investing. So that's one of the motivations of early on of why I started my channel. And then two, just to as I started kind of learning my investing style and really honing in on what I was investing in, then I started to see that there's a lot of bad content, and even a lot of people that are leading people in bad investment decisions. Even though at the end of the day, anyone who comes to YouTube and then are using it as their investment decisions, that's on them anyway. But you know what I mean? You really do have to carve out your own path. But when you're newly trying to figure out what you want to invest in, you obviously are easily influenced. So so anyway, that's what really that's when I started that blue chip series that I did, and it was to basically I'm going through every sector of the 11 sectors, and I'm finding the blue chips that aren't high yield traps, basically. And because I was seeing that, and then once you start seeing some influence of people that are watching your content, like for me personally, it was my nephew. He started investing. He's only 18 years old from watching one of the videos I did, why you should invest while you're young. And then he started asking me about some other content creators. Should he invest in some really bad investments? And I was like, okay, this is personal. And then I started doing some of the videos I was doing to combat some of the really bad stuff people were promoting. So
I laugh. I made all those mistakes. I was tempted into that penny stock trading. I lost $3,000 doing it. So it wasn't one of those things that I didn't live and learn through. But
yeah, exactly.
It's just, I mean, if investors are hearing this stuff and they can avoid some of those landmines in the investing landscape, they'll be better off for it, certainly.
Right. So, and then, and I'm like you, I don't really have specific goals. I mean, about like subscriber count and stuff like that. I mean, I'll be honest, like a lot of people do kind of leave it, on just the fact that they want to build, a good community or whatever. But, obviously I want to get my channel monetized and have it become a little bit of passive income as well.
Yeah, for sure.
Right. So
you haven't been doing this very long, Jason.
Yeah.
But this point's pretty impressive, to say the least.
Right. So, so that's part of the plan. But other than that, it's really just, and I really do and have enjoyed the networking part of even the smaller channels, because I've met some really good people like Gen X. He's in here. I see Minds in Motion, Jose from 𝑪𝑎𝑛𝓋𝑎. I mean,
Nice.
all of these people, like, actually my first collab was with Jose from 𝑪𝑎𝑛𝓋𝑎 Investing, and he's went on his channel's monetized already, and we started the same day. So he's moved very quickly. But there's other people right now that there's a couple channels that are up and coming that I think are better than mine. That only have 100 subs. You know what I mean? But that's just because I've really kind of put my Facebook group out there as a content creator friendly group. So I get a lot of people coming, and I heard you last night, it can get kind of spammy. So I apologize about that, but I've met some really good people, and I've filtered out some of that noise too. You got to.
Yeah, you do. In my 3 years I've been doing YouTube, man, I can't tell you how many channels have come and gone. They're not on anymore. And some of the folks, man, that I've really, really enjoyed, some of the best content creators no longer create. Marvin with Financial Investor, I believe, was the name of the channel. That's one of those guys. I don't know what's going on. But for whatever reason, no hold a grudge, man. But I tell you what, reviewing his content at the time he was creating was legit. The guy was awesome. He straight up just walked right through a freaking balance sheet, and he was so detail oriented. I think there's a little bit of appeal factor on YouTube, that of which I don't think I'm very good at. I mean, Hopefully, I try to throw my dry humor out there and just be who I am for sure. If people can't respond to who I am, then maybe they can find somebody else. That's fine. But you'll find that you've been doing this, Jason, now just this year, and you'll find that some of those channels they come on and they go. It's tough. It gets tougher, I think, to maintain that pure motivation to come on and provide content to folks.
Right. Cool. Now we'll get into what's the best investment and worst investment you've ever made. I'd love to hear yours since you got quite a few more years of investing under your belt.
Okay. Sure. So, best investment I've ever made in my life didn't come in the stock market. It came in real estate. No doubt about it. I bought a piece of property in outside suburbia Detroit during a time where not one person at the time said, "Hey, Ryan, this is a good move for you." Not one. Ended up selling that property for a nice $65,000 profit. That is the heart of a video that I put out, for sale by owner, because I was able to add about $8,000 on the top of that business deal. And I tell you what, I just had to bring myself to hold the pen, to put my name to that signature and take that check. And we ended up going to the bank right away, slowly at 30 miles an hour. And I don't come from money. Okay. So writing a business deal like that was almost surreal. Okay. Now I know this is an investment channel, but I will tell you the best swing trade I ever took was on Marathon Oil. Made $2,800 in about 24 hours on that investment. Bought it in the low tens, ended up getting kind of lucky with that trade. That's not indicative of something that I would look for new investors to be able to scale. That was a good investment. Done some swing trading with Amazon and Microsoft as well. Multiple $1,000 profits there. But I think some of the best investments that I've made over time have been in blue chip companies that I've just held onto for multiple years. Now, the worst investments, these are the ones that people really take value from. And when I first started trading and getting on there and doing penny stock trading, that $3,000 loss was the worst experience that I ever had. What I don't disclose a lot of the times is the involvement from the IRS, where I got a bill for $5,500 saying, "Hey, you need to cough this up." Now, I lost $3,000. When I cashed that account out, I extracted $400 from that account. Okay. Then I had to go in and provide data on all the entry and exits. It was more the exits, because what gets reported to the IRS is all the sell points. And if you don't go in there and draw and put that baseline in there of where your entry was in that stock, then it defaults all the way to zero, and it's disclosed to the IRS as all profit. So I'm so down on penny stock trading, man. It's a fool's game. It really is. It's a fool's game. And there's people who come onto my channel who are actually successful at doing so. But what does that mean for individuals? Is it a scalable program? No. One of the biggest YouTube channels on right now with 650,000 subscribers does just what I'm talking about with trading. And I wish the individual all the best, but it's an avenue that I've lived and learned on, and I've made 20-fold the money since I've lost that, initially. But I learned a lesson, and it still leaves a scar, no doubt about it. What about you?
I think it would probably be. We were talking off air, but probably my 3M purchases, because I was an employee at 3M, and I was getting 15% off, and then it ran up to all time highs. It was at like 230. So I bought a lot of 3M at 140, 130.
Yeah.
That was with my discount. And so, like I told you, when I started individual stock picking, when I built out my initial portfolios of ETFs and stocks, okay, I had about 10 grand in 3M because I was an employee. So I used it to diversify a portfolio. Yep. And I sold at the top, so I was pretty happy. Now hindsight being 2020, now it still hasn't got back to some of the prices I was buying it at.
Trust me, I know. I have 12 shares now, man.
Yeah. Yeah, I sold it like between 215 and 225. I sold most of my 3M shares. Yeah. So and that wasn't anything I did because I just knew I wanted more than one stock holding in my portfolio. So anyway, so that's probably my best. And my worst is I told this in another I think in this questionnaire that's going around. I got into NIO at all-time highs. NIO, which is like the Tesla of China or something like that.
Yeah.
And I sold it right before the first earnings where it crashed, and it's still. I bought it like $10. Now it's at $3, and then it went down to like $250. So I lost 75%. In that one holding, and I probably had a couple hundred shares. It was a terrible investment. I read a couple articles, and even that one wasn't necessarily me following anyone else. It was me following myself down down the wrong path. Yeah. I read some articles and jumped into some hype.
That's what I was doing. Yep.
So David Mathis says, "Is 3M a buy, hold, or sell?" It's always a hold at least. And so and it's still in a buying place for me, like that. And I'm actually rebuilding my position in 3M a little bit
right
like
now. You can,
yeah. Right, because it's at a decent. Yep. Okay, you want to keep rolling here because I don't see too many questions in the chat. So, all right. What's the most important message viewers must understand about your channel?
About my channel.
Yeah.
Okay. Pretty simple. I think a lot of people spend a lot of time getting caught up on the stocks and the ETFs and the index funds, and they fail to miss out on a much grander perspective about the stock market. Okay. So put the stock and the ETF and index aside for just a second. And I think what people really need to understand about the niche on my channel is the prospect of two things, okay? Self-directed investing means an opportunity to do something that a lot of people don't do, they don't know about. Even if they did know about it, they would probably get scared away from it, okay? That's self-directed investing in a nutshell. Now, you can get tax protection by going with any Roth IRA. But adding that self-directed caveat, that's the niche of my channel that not a lot of people talk about. There's a lot of self-directed investors out there across YouTube, Jason. You're one of them now, and you'll benefit from being that. But to truly understand the niche of my channel is to truly understand the wealth that's preserved within the account once you deploy capital within that account. That's it in a nutshell. It's liberating your dollars to work at its maximum potential. And I always say, if you as the individual investor is taking the risk, why would you share it with a middleman that, in my opinion, gets way too much credit for the services that they render? And that's the real takeaway from the Independent Investor channel. I've said this thousands of different ways throughout the course and the evolution of the history of the channel. And for those folks that hear me out, they're benefiting from it. No doubt about it. That's it in a nutshell, man.
Excellent. Yeah. I definitely really appreciated when I found your channel, that message as well. Although I had already found M1 and Robinhood, but I tried Robinhood and didn't like it, and then it didn't have the Roth aspect either. So I jumped out of I actually just played in Robinhood for like a month, and I was like, nah, no, thank you. Sorry.
No, you're good.
And then I really had jumped in pretty heavy in the M1 for those same reasons. So for my channel, really the message that I'm gonna hammer over and over again is, so we were talking about it at one point. Me and Ryan have talked today twice for about an hour before so we talked a lot. one of the things I kind of hammer home is, I'm going to talk about good, high quality investments on my channel. So whether it's the ETF or individual stock, I sort of make it a point to just as like for conscience sake, that if someone were to be foolish enough to follow my crazy tale and invest in what I'm investing in, that there's a good chance that it might be something decent. But I will tell you this, that I haven't used YouTube to find basically none of my investments. So I don't want to put myself or me or you out of business, but don't come to us looking for the companies that you should invest in. Like what I have gotten from YouTube is some companies that I put on my watch list, and then outside of me doing or watching videos, me doing my own personal research into those companies or funds or indexes, and taking the time to really get into. I mean, a lot of people have never been on an investor relations tab of a company. Why not? If you want to know about a company and all of the ins and outs of a company, it's cute. There's some they spend amazing amounts of times building presentations for their quarterly reports that has most of the information you would need up to date for the last quarter of a company. So, all right. So I'm off my soapbox, but at the end of the day, that's me. That's what I want my channel to be about. I want it to be just solid, quality content and companies that I'm discussing.
I think, Jason, if I may, I'd like to say what I saw in your channel when I first came across. I really just it was a lot more simple than that. It was, here's a guy, genuine guy, and here's how he seeks out exposure in the stock market. That in and of itself is pretty interesting. Now, when you disclose your portfolio, that's really where I was like, okay, this guy is looking at quality investments, seeking out diversification, all those things that you should be looking at. That's what I saw. So
appreciate that.
Really kind of why I popped you on one of my one of my featured channels on my channel, because here's the thing. I think what me and you do is very scalable. I think anybody can become an investor in quality products. I really do. It's just interesting to see the uniqueness of how each of us deploy that. And I think that's the attractiveness of YouTube. I think that's why people tune into those portfolio reviews, because they're interested to see how you deploy. That's it.
Exactly. Brent joined. What's up, Brent? Financial investor. Go check him out as well.
Awesome.
Excellent content there. So let's see. Where are we at in the questionnaire here? All right. Yeah, we'll take this next question, and then we'll come back to some of these couple questions coming in the chat here. So the next question is, if there was one thing that viewers should know about me that has really defined me as a person, what would it be?
Oh man, I tell you what.
Narrowing it down to one thing is pretty. Might need two.
Easy for me.
Easy for you. Okay. All right. Let's hear it.
Yeah. So I guess I've always been really driven. It can be a blessing, and it can also be a curse, to be honest with you. To be as driven as I am, not only to seek out what I consider success in life, but to although maybe potentially do some reflection and share what works for me. It was that drive and motivation when I was 19 years old that took me up to Alaska, and commercial fishing in the Bering Sea, commercial fishing up in Southeast Alaska opened my eyes to what real work was, how you could go through real work and not be paid for it. I'm not kidding. That's why they call it fishing, not catching. You know what I'm saying? Hard work where you put a lot of preliminary work into the project only to go up to Alaska for the chance of making a payday. All right. And that's the type of same philosophy that I really look at when I look to gain my exposure to the stock market, and I do it carefully and I do it deliberately. I really do. It's really what drives a lot of my focused passion for this. I don't think there's really any, there's no substitute for that. There really isn't. And that's what was cool when you told me you were a Mason at one point in your life, man. If you haven't done that level of really hard backbreaking work, it's difficult to really appreciate those things later on in life. And that's the one thing, if people were to understand a little bit of the pedigree of where I've come from. Now, I tell nothing but positive stories now, and I've tended to forget the negative stuff that I've had to go through. But it's cut from a tough cloth, no doubt about it.
Did you happen to work on any of the boats that are on what's it called, the
certainly
on that TV show?
The Deadliest Catch. Yes, we used to offload to the Saga. We used to offload to the Cape Caution, which was on there before. That was Wild Bill's old boat.
And, cool.
Worked for that company. Trident kind of owns the world up there for seafood. So if you notice who they're offloading to, Trident is the company. But lots of boats. And at the time, I wouldn't have known, if any of those boats were going to be famous. But that's one of my guilty pleasures, is catching Deadliest Catch, no doubt.
Right.
I love those guys, man. I've been there. Yeah.
That's cool. I DVR that show. I watch it as well. Yeah. One of my favorites. So let's see. What the one thing that defines me as a person? I mean, so I guess
you play a mean bass.
Huh?
You play a mean bass.
I actually do play bass, but I haven't played it in a while. But so I've actually. It feels like I've lived two lives in one life. Because I don't think I've talked about it too much on my channel, but I mean, maybe I've touched on it some. But I was a messed up kid. I was talking about this a little bit with one of my subscribers. I don't know if he's in here, Forlorn One. So yeah, I have moved out on my own at 17. Basically, I got kicked out.
Yep.
And I was in a bad place, making bad decisions, and had to grow up real fast. And that's why you're talking about. You mentioned I was a brick mason, so I did construction work. I was a bricklayer, and I started as a hard laborer, shoveling mortar up scaffolding and stuff, throwing bricks, Yep. All that kind of stuff. But I worked my way up to apprentice and to a brick mason. And I was a skinny kid, so I hadn't have a bricklayer build or anything like that. But like you said, hard work and and just knowing I didn't want to be a laborer, being driven to move to the next levels of.
There's the lesson you learn.
Yeah,
I want to do this forever.
Exactly, and then I got married and life began to change for me. I began to, grow up. And so I feel like I've lived two lives. And I think most people do, like a lot of people don't grow up now till they're 25. And I don't really feel like I grew up till I was 25 years old plus. Yeah. A responsible person until I was probably 25 years old. So I'm a late bloomer. So I'm 40, but I'm just now blooming. So I don't feel like it's so to some of any of you all who, I think someone in your live stream last night was saying, is it too late for me? It's not too late. You can start over, or you can start something new at any time.
I'll never look at my life as anything being too late to do anything. And I hope to portray that to people who feel that way, because it can be a barrier to entry, Jason. They can kind of use that to say, geez, it's just too late for me. I can't win. Well, hold on a second. Let's run the numbers and see where you could potentially be. If you're 40 or 50, let's run the numbers. When do you want to retire? When would you need the numbers are what they are. Is it worth shooting for, or is it not? But make an educated decision.
Right.
Don't succumb to a barrier. No way.
Right. No doubt. All right. I guess so. We're about midway there. Let's check out. couple questions. I guess a couple people mimicked the same question, which was I'm trying to find it. It's just kind of out of order. So a couple people were asking if we had any companies that that are buy and hold forever and we would never sell. So,
Yep.
I mean, I have companies that I'd never plan on selling, but if things change with that company, I will sell.
Well,
That's my simple answer to it. Right now, my favorite companies are stuff like Costco, McDonald's, the blue chips. But if something changes in their in their business model, revenues start, or political climate destroys the company, then I'm selling.
yeah, ironic enough, man, I just took profit in Costco, actually. McDonald's I haven't owned for very long, but I do intend on holding that. I wouldn't put that in a category of a stock that I would necessarily label a stock that I'm going to own forever. Some stocks, right, wrong, or indifferent, are in that category. I'll give you my top 5. Apple Computers, number 1. Number 2 would be Disney, Johnson & Johnson, JP Morgan Chase. And I used to have Procter & Gamble, but I don't want to be a hypocrite because I don't own Procter right now. I would substitute Procter with Pepsi. And that's where I'm at with those 5. Those right now are probably the most solid. Johnson & Johnson, I think, is the 5th, if I didn't give you 5. But J&J, those are the most long-standing positions in my portfolio, and I look right over them when I'm looking to maybe take profit in certain stock, like Prudential, right? I owned Prudential for the last 2 weeks. It had a 13.5% increase, just sold it Friday. I sold that Friday, took a nice 13.5% profit. Medtronic, same thing, right? So in healthcare, I look at Pfizer as being one of those, Johnson & Johnson as being kind of one of those, like I'm going to hold it forever. AbbVie, I just picked up as a dividend payer in healthcare, but I parlayed my position in Medtronic. I was up 22% there. So just went ahead and took profit there to reduce a little bit of exposure to healthcare. But those are my 5. Most people understand that about me. And I do have a list of 10. You could throw Microsoft in there. You could throw some honorable mentions in there as well, and Home Depot, another very well-run company.
Right. Cool. Yeah. I mean, I have in my IRA on Infidelity, it's like 15 holdings and like 10 of them are ETFs and maybe 7 are ETFs. But yeah, I probably have those core holdings in that Fidelity portfolio that nice. I got drip turned on, and I'm not. It's like Costco, Visa, Waste Management. I can't think of all of them, but those I probably won't unless those will probably be there, for the duration, unless something changes with those companies.
I don't see things changing.
Yeah.
I mean, Johnson & Johnson's been around 100 years, been around a lot longer than us, brother. So
Matt Money. Matt Money. I don't know if you've ever checked him out, Ryan. He's got a great channel. Check him out, everybody, as well.
It's cool.
He's one of the first he reviews his portfolio, and he's got like the craziest spreadsheets I've ever seen. how he tracks his dividends and stuff like that. So
that's cool.
Welcome. Thanks for tuning in, Matt.
Awesome.
All right, so let's jump back to these questions if you're ready to do that.
Of course I am, man. I was born ready.
Let's go. All right, so what's your definition of success?
Geez Louise. Mine? Oh, God. That's a good one. I think a lot of people's definition of success gets misconstrued. I will start by saying that. It confuses me a lot of the times. Almost sometimes make me feel a little bit guilty where, I would value something more like family, health, spirituality. I actually work a regular job. So, when I hear folks come onto YouTube and they're down on like working class people, I'm one of them. So it's like, look, all the best for you if you want to follow the entrepreneurial way and you want to retire at 22 years old. I'm not really sure what that means, but if you want to do that and you want to have that level of success, that's awesome. Is it an accumulation of money? I've seen a lot of folks with a lot of money in my life that were unhappy as hell. And I've seen a lot of people that are salt of the earth people, man, straight up. I used to work with guys and gals in Alaska that would take their paycheck and they were off to the Philippines or Costa Rica, and they would live like kings until they could go back up to Alaska and do it all again. Think for a second about that lifestyle, man. The free spirit. You know what I'm saying? Are these folks that are continually pursuing the shallow satisfaction that you get from money? Do they have that level of satisfaction? I don't know. I'll just leave that rhetorically to the group. Success for me, man, is you're going to gain a level of satisfaction from all the different aspects of your life. And I really try to parlay the financial piece to being something that you can absolutely control with discipline. But if you're looking for spiritual satisfaction from financial success, you're off base. You really are. I've got people who come into the channel and they really need work in other facets of their life. And there's nothing that they're going to be able to do in the financial aspect that's going to supplement those other areas of life. So I guess my definition of success is to have a holistic appreciation for the little pieces of satisfaction that you get from each and every aspect of life. That's what I would say.
Gotcha. That's great. Yeah, that is. I mean, I'm locked in with you on your the vein of thinking there as well. Because to me, you know, this investment part of the journey is. I'm like you as well. It can become all fairly consuming, and it's because it is enjoyable. I enjoy it, you know, and but at the same time, so for me, it's like really it's having the relationship with my wife. That's probably when that's in tune, you know, because I could say, you know, with my kids, but when me and my wife's relationship isn't right, the relationship with the kids isn't going to be right.
Yeah.
The job's not going to be right. You know, everything else is going to be you know, in shambles as well. So for me, it's having a good marriage, because I'm now 14. We're both 14 years married. And I mean, I have family members that are getting older and they're seeing, you know, lots of changes. And now we're becoming like you know, a point of reference and a place where people come for advice in our own family from people that have been married 20 years going through things.
Dang.
So, yeah, so I really take that aspect of life, you know, that relationships are the highest priority. And in my particular situation, my marriage is my highest.
Nice, man.
Anyway, that's boring the mess out of the crowd here, and they're turning off their computers and they're running away. So let's get back to something else. Okay, I think, is that a duplicate? Yeah, it's a duplicate. Okay, so I'll move to the next one. Personal hobbies. Here we go. What do you like to do for entertainment, travel, etc.? So this is a little bit about the investor. Tell us a little bit about Ryan.
I wish I was better at guitar. I've been trying to figure out that mystery for the last dang 20, 25 years of my life, man. My dad's got the real gig. He's got the SG, the 68 SG Gibson. That's a cool thing. But that's on the West Coast right now because he won't let that one leave the house. But I do enjoy music for sure. I like guitar. I have to say that I do love traveling, no doubt about it. Investing is a hobby for me. I'm slightly addicted to investing. I that openly to everybody. And I benefit from that addiction. I do. I have a higher sense of awareness. I expect that of a lot of other people, and sometimes I get frustrated when they don't have quite the level of excitement that I do for it. But to each his own. Yeah, I mean, that's it in a nutshell. I think for hobbies, fairly simple. a private person, no doubt about that. Definitely an introvert. So having a social media presence is kind of funny and ironic for me. Just the way it's inspired, you know?
Yeah. Yeah. So I guess for me, I'm a sports, fanatic.
Yeah, you are.
Yeah. So, but but since I started this channel this year, and so deep into, if I'm not creating content or creating an outline for a video, it's me doing research on what to buy next. That it's that scaled down, because in previous years I'd be in 3 or 4 fantasy leagues and trying to see how many games I can go to, because I'm obviously a Carolina Panther fan. If you're following my channel, you know that. But so sports, and then like I was telling you too offline, that we traveled for 6 months, so we do enjoy hitting the road, and we actually even did a road trip since that travel to Colorado. We drove to Colorado to go visit some family, and didn't fly. Usually we fly when we're not. So I have because I got a big travel trailer, but I'm renting it out. So I'm actually just said, you know what, that's out of sight, out of mind for about a year right now. So. And we're letting it it's being rented out right now. So yeah, those are really, I do enjoy traveling and sports, and like you, investing is a hobby. So, question for each of you from Gen X.
Nice.
Here we go. Let's see. He's always got some deep thoughts.
For sure.
If you could go back in time, what would you tell your younger selves about investing other than specific stock picks?
Jesus, man, that's an awesome question. I think everybody should run through this rhetorical line of questioning, or at least live vicariously through our answers. Because, like I've noted, I could have done away with half of the mistakes that I made, no doubt. And still to this day, I'm really hard on myself for wanting to understand more about the stock markets. I wish I was a better stock analyzer. I really do. I really try. I do. But if I were to go back and talk to the 19-year-old Ryan, it would be very, very simple. Simple. But the problem is you don't have the understanding at 19 that you do at 42. Okay. So I would put this plan in motion with the caveat that you would have to stay devoted to the program for 40 years. And the advice I would give would be very, very simple. Enter into the S&P 500, dollar cost average it, or opportunistically buy it, either one, but never sell it and hold it for the long term. That would be my advice. And that is a root of advice that I say in a lot of different ways to a lot of new investors. Now they'll scatter and go in a lot of different directions because they want to outpace and they want to beat the market. They want to have that allure of single stock is very, very strong. And it gets very strong when you enter into single stock and you have a few wins, right? That's what really is hard for me to overcome when I'm talking to new investors. And it's like, look, this boring route here is probably the best route for you. I know it to be that. And if I were to go back, that's exactly what I would tell a 18 or 19-year-old Ryan, is to do just that. But I'd have to have the mental fortitude. And that's the beauty of it, is that folks that are just tuning in can really hear the pulse of my opinion 20 years after the fact, right?
For sure. Yeah. I mean, me, I even, I think one of my first jobs where I got a 401k was like 28, 27. And I remember, when you're going through HR and they tell you, they give you statistics and stuff and tell you why you should invest in it. And I did. But then I quit that job and cashed out a 401k.
Yep.
I paid taxes on it, the 35% or whatever,
That's right.
So it would be just to have started as soon as I could have investing, even if it was the dumb money investing into even in a 401k where it's, mutual funds, whatever. Do it anyway, and take the every advantage that is every advantage, especially the tax. It really, like you talk about the Roth. I mean, if you can get into a Roth at 20 years old, it's just unbelievable. Even if it's just, if you max it out, just max out. If you can max out $5,000, 5-6 grand at 20 years old for, 30, 40 years, it's made money. You just never have to think about it.
The irony in that, Jason, is that if you're 20 years old and you're starting that Roth, at the time I was 20, and still to this day, $5,000 is a freaking lot of money. It's a lot.
Right.
But mathematically, you only need 100 a month. 100 a month.
Exactly.
That young, you've got the ace up your sleeve is time. And to leverage that time, it's something that gets kicked to the side all too often by our younger generation, no doubt about it.
Right. But funny enough though, a lot of I'm seeing a change where a lot of kids nowadays they're not smarter these days. They're just they're better. They're not getting into much trouble as everyone I was around when I was.
No, I think you're spot on in that, and and I also think that when I started investing, ETFs weren't really around, or at least it was one of those things that eluded me. I didn't know they were around if they were. Self-directed investing. I mean, I started self-directed investing when Merrill Edge started doing self-directed investing, so that wasn't around either. So the opportunities I remember when these weren't around either.
Right.
So introducing and having everything mobile and being able to trade stock on a smartphone, that's big opportunity. And I think you're right. I think the younger generation understands that they have full access to all information that's out there available.
Yeah. Wednesday night, I had in my live stream, I had in the early part of it, I had Investors Herald is the name of his channel, and he had a custodial account at 16 and then at 18. Anyway, at the end of the day, the guy he's been investing for like 8 years now, and he's only 26 or 7 years old.
Yep.
So that's what I mean. That's if you're set up right, by your parents.
Yeah,
it's pretty cool.
Yeah, and those custodial accounts, I think, are the best way to go, actually.
Yeah.
Yeah.
Awesome. Right. I just opened up one through your referral link.
I know you did.
For my daughter, so.
I know you did. Smart, man.
Yeah.
Really smart, man. It's big. That type of stuff it's give me sentimental a little bit for, a father doing that for a kid. That's big.
Yeah. She's excited. All right. So not seeing too many more questions from the chat, so we'll move on.
Mm-hmm. Name
a couple things that make you a better investor that has nothing to do with investing.
Anyway, I think you can work really, really hard at the onset of becoming an investor, only to allow your plan to kind of go on a plane a little bit. I think the less tinkering you can do as an investor, the better. Some of the things that help me keep my mind off of investing that have nothing to do with it is diet, exercise. Those are huge. Giving myself a break. That's really big, but exercise is one of my favorite things to do. I do box, I do run, I do weight training, and those types of things really are some of the things that help me keep balance. And also diet for sure, but I don't even like the word diet, okay, because I like to eat. But I think aligning the diet that allows me to run at the pace that I do is the key to my success. Because if I eat the wrong things, I'll crash out. My eyes shut down. And I think aligning a diet that's conducive to your speed, I think is important as well. That's what helps me, no doubt.
Excellent. I'm gonna take it a different route. I'm gonna say common sense. It's one of those things that you either got it or you don't.
No doubt.
But it sure comes into play, especially with like the possibilities, investment opportunities, and things that people tout and try to sell and those kinds of things. If you got common sense, you can see right through it. If something looks too good to be true, it is too good to be true. You know, and there's a lot of those. I'm trying to think.
That's a good one.
Yeah, and just being witty is another one that comes into play because, well, I guess having foresight, because while I don't really go into too risky of investments, even I still look for growth in companies, even in dividend paying companies.
Yep.
I don't want to just have some old archaic company that the growth is gone.
Yep.
So you want to be able to look ahead and foreshadow what could catapult a company look coming down the line. So let's see, common sense, not so common. So one more pretty good one from Gen X is, how much time per day on average do each spend on YouTube social media endeavors? Woo! I don't want to know mine.
How long has Gen X been on YouTube? He just started this year, right? Is that correct?
Yeah, probably a couple months.
I probably owe Gen X I'd like to do a collaboration because Gen X Investor has been really, really vocal in my live streams, which is really cool. But the comments on my video are very, very insightful. I always kind of gravitate toward those comments because they're really good. They're really insightful. And I think I'd like to get into a little bit of a back and forth with Gen X because I think we're a lot alike in our application for sure. But what was the question again? How much the time spent on YouTube? And Jesus, you don't even want to know. I think he asked me this question about how much time I spent when I started, and it was like insane. I mean, if you did the math on it, where you're talking pennies, maybe. It's ironic enough, the first 7 cents of passive income that I ever made off of YouTube are the 7 cents that I actually remember. And now I'm making a fairly interesting monthly income off of YouTube. It's interesting. It's a stipend, but at least it's something, and I hardly call this passive because I'm working and being paid for the work. It's not as if my videos go viral, now that's passive. Okay. That's putting the X amount of time and then it goes viral on you and you make 10,000 on a video. It hasn't happened to me yet. I don't foresee it happening. My style of video making isn't conducive to that, but I have tried to incorporate my time spent on social media on a little bit more of a regimented basis. What I mean by that is I'll film and drop content the night before, and then I'll edit it and do all the thumbnail applications and all the tags the next day. So for example, tonight's release is already done. Tomorrow's release is already done. And then I'll be on the hook, maybe even this evening or probably tomorrow to film Monday and Tuesday's content. That's what helps me is to stay ahead of it. And Jason, you've got a little bit of this going on as well with how you've got your time management. And if you don't have that time management, it can be consuming because you wait till the last second to try to ram a video through, take care of all the stuff. It is a process of getting content online, Jason. Would you attest to that? I mean, it is. It's a process. And once you get the process defined, it makes it easier. But time online per day, I've just made this part of my life a little bit. I don't foresee the channel going anywhere ever because it's a topic. It's my out. It's my release. And if I have the opportunity to come on and help people by just providing what it is I'm interested in, then that's what I'm going to do. But certainly there's a few hours there, but I don't look at it as work. I don't. I just look at it as an extension of, like Jason's talking about, you only have so much time in the day. So you spend a little less time watching television and a little bit more time providing this opportunity through YouTube, right?
Yep.
Sacrifices,
Right. Yeah. Like I was telling Ryan, kind of because I work remote, so I work during the day, and I'm sort of pinning some things down as well, like pre-planning in some downtime while I'm working, and then at the end of the day, when I finish up my work, I usually make a video, maybe 4 days, Monday through Friday, and then I do a video. So I usually do 5 videos a week, which, I've talked about this in a couple other arenas. A lot of people, small channels doing 1 video a week, it's going to be tough for you
when you start.
when you're starting. Yeah.
Yeah.
So I do a lot of videos, but I do also try to, as Ryan said, I try to be thoughtful on the directions of the videos. It isn't just thrown together. But I have that luxury of I work from home, and then so I basically finish work, and then I start this as work for an hour or two to film from the notes that I've written, film a video, and then edit it and get it out, and then of course once you get it out, then the comments start coming in, and then you got to post it on all of your social medias. So it is a lot of work, but
the comment replies are probably one of the most consuming things that I deal with, to be honest, to really hit on what Gen X is talking about. And it's something that in my assessment, the only value out of that is the value that's received by the receiver of the creator's comment back to them. There's no monetary compensation for that time. But it's something that I picked up on some of my earlier videos. Some other larger channels talked about that as one of the real ways of leveraging your channel and really showing people that you care. There was a few bigger channels that I went in and dropped a very, very thoughtful comment and never even received a freaking heart. You know what I'm saying? Like, wow, I didn't even receive any type of acknowledgement with my comment. And I don't want somebody to feel that way when they come on. I can't get to all of them. I mean, Jason, you have no idea, man. I mean, as the channel grows, you'll start to see what I'm talking about. And I don't do any auto replies, man. My fingers hit the keyboard on every single comment I put back. I don't do auto-generated garbage. I mean, I'd rather not leave a comment than do something like that. But I spend a lot of time doing that, trying to give a good effort, a few seconds for each comment back. And when you're doing, I'm in a pretty good cycle right now. So they build up on one channel or one video that I need, and I'm releasing another one, So you're constantly going in there and adding that to it. I enjoy it to an extent.
Right.
Being real.
Yeah. There's a lot of good community members, and there's some bad. But you can't have one without the other.
Nah, you can't.
Another thing, right? It's just part of the deal.
For sure.
So ran course is a ton of work. Got to stay on top of it. And then All Good asked, how do you come up with fresh content every time? Sometimes it might not be fresh, but the goal is to have good, fresh ideas. I mean, I know for me, it'll be something will usually just kind of it'll pop into my mind through research, really, through researching companies or occasionally, I do get inspired sometimes by other content creators as well. So that plays a role. But then you don't want to imitate. You want to have individual uniqueness about it. But yeah, so it takes planning and thought, really. So, how about you, Ryan, for fresh content?
Yeah, so I've really evolved in this line of thinking, how I put content. It's odd that when you start and you have 0 videos uploaded, that you would think that would be the time where it's an open arena of ideas that you could put onto YouTube. I'm more proud of the current content that I put online than I am of the beginning stuff. Okay. And there's been certain pieces of content, teach his own. When you're creating, I know there's folks that script their videos. I do not. I choose not to, and that's my style. 333 videos. I've never scripted one. Never. And but I usually use times when I'm out running to brainstorm ideas. I would say that for every 10 ideas that I may have, I'll throw one down on and really feel motivated enough to go ahead and throw that content on there. I think about, through the creative process, certain ideas that I'll forget because I don't write it down. That's another thing is when you do have these ideas, keep a ledger. I think that's a good idea. It's not one that I follow, but I think it could help a lot of folks out there that are looking to create content. Don't allow the pressure of creating content to drive you. Okay, I let it come naturally, and that's why I'm a little more proud of the evolution of my channel. In that I'll get so excited about an idea sometimes where I'll be sitting on the couch and I'll be like, I got to throw down. And you've got to provide yourself that opportunity to click on the GoPro, click on the lights, and roll. You really do. Maybe I'll throw a quick outline on the whiteboard a little bit to help me structure my talking points. Usually those talking points are one word. For example, diversification. Okay. And I'll know exactly what I'm going to talk about, but that's typically some insight on how I go about that. When I'm driving to work, maybe I'll be thinking about, hey, where do I want to take this lesson this week? Like, for example, this week, I already have it structured in that I want to show the levels of income that it actually takes, whether it be 25,000, what type of numbers those can render. Somebody who brings in 50 grand a year, what type of numbers those could realistically render. Because I get those questions all the time. Hey, Ryan, I make $24,000 a year. Can I succeed in investing? Well, the answer is yes, but it's not an open-ended answer. Yes. Here's what you could probably realistically do with your income, taking advantage of sunken costs. So that's going to be this week's agenda. And that's going to be kind of the topic. Last week's agenda was investor profile, right? So that's the way I roll with it. And I have fun with it, man. I don't sweat it. It's not worth it.
Right. Yeah. Yeah. That was kind of one of the questions. I was sort of I didn't answer it that way, but that's my take on it too, is, I don't take this that serious. I take it serious, but I don't take it that serious.
Yeah.
If you can say both of those things in the same sentence, because yeah. There's thought put into it, but at the same time, it's if one of my videos flops, then it's not like I'm not devastated by it. It's not going to be the end of the world. We got one more unanswered question. Well, I guess Informed Trades was asking what are our auto-generated comments. I think there's some tools that you can.
There are.
Yeah, you can just. It'll auto comment on every reply, and then you could come back and comment more. But I think TubeBuddy even does that.
That's what it is. That's what I was referring to.
Okay, yeah. So you just set it up and it replies for you.
Okay.
So the last question we have on our docket here is what's the greatest improvement to the investing landscape in the past 20 years?
That's awesome. People have been, this is an hour and 18 minutes into this, Jason, and now they're getting to the meat and potatoes of what they can understand about what's evolved in the last 20 years in the investing landscape. Discount brokers, certainly. The opportunity rendered through an M1 Finance, and I'm not tooting my own horn. I'm not going to. Those are my two affiliate programs, right? But there's a reason why I endorse those two programs, and there's a reason why I don't endorse Webull. Or any of the others that a lot of folks will endorse. Those are the two. I think robo advisors certainly has changed the landscape. I think quantitative investing, certainly with the algorithmic trading that goes on now, has really changed and added a lot of volatility once triggers are met in the stock market. I think it demands that a passive investor be that much more passive and pay a little less attention to the market, because at the end of the day, if you're passive and long, it doesn't matter. It doesn't matter. And I think a lot of people get caught up in, oh my goodness, there's exacerbated selling going on right now. It's down to 1,000 points. I should do something. Why? Because it's the natural reaction to do so. It's in our nature to try to control things when things are seemingly out of control. But I think that's really changed the landscape. One of the mistakes I've had throughout the course of the channel was getting the betterment option pushed out through the channel, and it went against my philosophy, and I took a lot of flack for it. I really did, and rightfully so to an extent. I have my own personal opinions on why I did that, but that's certainly something that's been rolled out to provide a low-cost professional service to investors, and it relates to a specific genre of investors. Those investors that don't have the time to devote to, like me and you, to geek out on the stock market. They can run themselves through an automated risk profile, and it'll spit out a pretty impressive product for those folks. And I know folks that have gone with Betterment and they're succeeding with it. So for the right client, that works. But that's certainly something that's changed in the last 20 years. I would be hard pressed not to throw. I know ETFs have been around for longer than that, but not according to my wherewithal. No doubt about it. I've learned more about ETFs being on YouTube than I ever learned before I was doing my independent research online. No doubt about that. That really helps trigger some curiosity. I think that's it, to name a few. ETF costs coming down. I mean, we're racing to zero right now, Jason. You were talking about some of those Fidelity products that you were talking about that are just racing to zero.
Well, I haven't talked about them yet, but there's Fidelity has a line of like literally zero. Like they have like 5 ETFs where there's no cost. They're called 0x.
Yeah.
So, but yeah, I just haven't been really overwhelmed with their holdings, so I haven't invested in them. They're not the greatest. But that's probably why they're doing it.
And that's typically what I encourage people to look at is they'll parlay a couple of products out of their offerings and get people in the door into those zero cost products. But it's not an IVV. It's not a VOO. It's not a Vanguard type of S&P 500. So, paying the 0.03 for a Vanguard or a 0.02 for an S&P product from Fidelity, something like that, you may be better off to do that. You just got to look at the performance and the actual holdings within those products.
Right. Well, now to your other point though about like a lot of people don't realize that the sector ones, they're basically the same as Vanguards, but they're cheaper with Fidelity. But a lot of people don't know that. Like the expense ratio is cheaper with Fidelity on the sector ETFs.
That's correct.
And they're essentially the same thing.
And it's worth saying for investors who are tuning in for some killer awareness pieces is that I can own a Fidelity product in Merrill Edge.
And M1.
Exactly. And that's very important. It's got to be attractive to new investors, man.
That was recent because when I opened up an M1 account, they didn't have Fidelity ETFs. Since then, someone corrected me in one of my videos because I didn't know it. They said no, Fidelity is now on M1, so their ETFs are on M1 as well too. So let's see. Okay, well, hold on. I got one that I don't know if you touched on. One of the greatest improvements that M1 does it, but there's going to be more people rolling it out. The fractional shares, the ability to buy fractional shares is a game changer because then you can get into any company you want. You never have to think of, nothing gets ruled out of your portfolio with fractional shares.
You want to buy Amazon booking holdings, Google, some of these higher price people get run off, even the stocks like a BlackRock, some of these companies, Chipotle, right? I love Chipotle. I've never invested in the company, but you're right. M1 Finance is really unique. I do have some criticisms of M1 Finance, but for the most part, and this is based in large part in a balance between what I hear from the channel community and my own assessment of M1 Finance. It's not only the fractional shares that M1 Finance offers, but it's the portfolio reinvestment. No other product on the market offers that type of thing. And it's hard to explain to folks how, if you own an AT&T and you get paid that dividend, it goes into the portfolio, the lowest allocation within the portfolio. And I think that's a game changer. That's going to create a lot of wealth for a lot of people, I think.
And I just learned that I didn't know because they're rolling out the M1 Spend,
Yep.
which is the checking account part of it, which also pays you interest too. But I learned that they're rolling out another buy window if you have M1 Spend. So you got the morning window, but if you got the checking, there's another window, which is everyone's gripe. That's most people's main gripe with M1 is you got one window. That's it.
That's mine.
But if you got the checking, I guess there's an afternoon window they're going to open up for you. So if something tanks, mid-afternoon, you can buy later. So that's one more thing. So they are listening, I guess. But I've said, it's just a matter of time before even Fidelity or TD Ameritrade or one of these big ones picks up on that, on the fractional shares. Anything M1 can do, these other guys can do it too. Oh, yeah. So they're going to do it eventually.
Definitely.
I guess K9 had a question about, and I'm not sure, maybe like so the question was, I'll put it up. If you want your kids to continue your M1 when you pass on, do you need to do anything besides make them beneficiaries? Because I have them set as beneficiaries, but would they take it over or would they cash it out and sell it to them? I don't know.
Yeah, so you need to look into implied beneficiaries. That would be your wife to start, and then your kids as well. It never hurts to have that not only within the platform declared, but declared officially within a will or a living trust. Okay, so those are the first things. Have it identified in multiple places. I don't like the word implied when you're talking about my family's money. Okay. You need to have that codified in at least a will, which is really, it's tough because I would never want to subject my family to having to go through probate, right? I would rather have it in a living trust where I've got an administrator over that who can name those. Now, what's going to happen with the Roth is it's going to roll over into what's considered an inherited Roth. And at that particular juncture, it would be disclosed to your heirs what their options would be at that particular time, especially if they were under the age of majority. Now, keep in mind, neither me or Jay, I don't want to speak for Jason, but I don't know if he does tax accounting on the side. I am not one, okay? So certainly when you get into these taxation questions, I give you the best answer that I can, but that's what I understand about how that would happen. Now, compare that to what happens in a traditional account, okay, where the government's going to come and knock on your door at 70 and a half and want required minimum distributions from that account. In a Roth, it does actually have the ability to roll to the next generation in what's considered an inherited Roth IRA. And I would consider doing your own research on that. Google it. There's no excuse not to have answers nowadays. So but hopefully I'll put you on the right track there for that answer.
There you go.
Yep.
So, yeah. Okay. But I guess Robert has asked this twice, so maybe what's your favorite general ETF that captures the market as a whole, VTI, VOO, or another?
That's my
you got a favorite? I don't know. Just one of my favorite ETFs in general is DGRO. It's only 5 years old. It doesn't. It's not on a lot of people's radar, but because of my angle of investing is dividend growth, and there is a lot of good dividend growth ETFs, but DGRO is one of the few. It's kind of forward thinking in that like they've weighted more of the tech dividend growth companies, and that's why it outperformed. That's why it's outperformed. Of course, we're in the biggest bull run of all time in the U.S. history. I'm not saying that. I'm not discounting that reason, and tech typically runs up higher than the rest of the market, so that's why DGRO has outperformed. But it's only $38 per ETF. So even if let's say the market falls apart 50%, look how easy that would be to dollar cost average into. Sure. You could, if it went to $20, how easy would it be to pick up 5 or 10 more shares?
Sure.
And then wait for the next bull market.
Sure.
Nice. So that's my take. That's one of my favorite ETFs, DGRO.
Nice. I've just been turned on to SPHD. That's one. Charles Schwab has an S&P 500 index that runs around the same price that you're talking about there, Jason. I forget the ticker symbol. I don't have them all memorized. SPWWX, something like that. Something
Right.
like that. You just Google Charles Schwab S&P 500 index fund. You'll see what I'm talking about. But the two that I own personally, you disclosed there on the screen, VTI, VOO, very low cost, both flagship offerings from Vanguard, products that'll get it done, certainly. So splitting hairs at the top, this is where I want the conversation to be, is looking at the very best of offering. And I think I don't want to speak for Jason, but if there were something better than that out there, it would certainly enter into the realm of discussion, because we're always trying to revolve around these things. And I have people bring them to my attention as well.
Exactly.
Y gets talked about all the time. IVV talks about, these are different offerers like State Street, Invesco. So these are just companies that bundle up these products, in a little different packaging, but the innards inside each packaging is very, very similar, and you can win with them. They're built to be low cost, passive products. So you can win with all these, depending on your time horizon.
For sure. Well, I mean, I know you were in a live stream 2 hours last night. We're an hour and a half here. And it's the weekend, so we want to give you some of your weekend back, Ryan. Sorry if we missed. Okay, Financial Foundations, you got the ticker symbol on that one, SWPPX. So go check that one out.
Remember that. Look into that. That's a good product. I like it.
Sorry, Rancor, we didn't get you a question, but I don't want to hold Ryan too long. He's been very gracious. We can do it again maybe, or go in he does live streams every Friday night. I'm doing live streams every Wednesday night, and I'm doing stock screening. So bring some ticker symbols, and we can screen them there, and you can come to an opinion, or we can both discuss those at that time, or in his live stream. You're welcome to come and ask questions in his live stream as well.
Absolutely. Jason, thank you so much for doing this, man. Really appreciate it.
Thank you.
Hope you get a bunch of subscribers out of the deal, man. Keep grinding. I thought for a second there I was going to have to relinquish my title as the grinder on YouTube. I will partially. Keep working hard, man, for sure. I think it means a lot to a lot of people. All right?
Sure. All right. I appreciate it. All right, ladies and gentlemen, have a good weekend.
Cool. Thanks, Jay.
Deuces.